Reversal patterns are chart formations represented by a group of candles that help us identify high and low points. For example, when we buy a stock, we want to sell as close as possible to its high, but if we are shorting a stock, we want to buy it back as close as possible to its low, just at the point where it begins to go up. Reversal patterns are usually formed after a significant rise or fall in price. They are subdivided into bullish, implying an upward direction, or bearish, implying a downward direction, formations. The following reversal patterns are common and accepted by professional traders. Doji, a bullish pattern formed at the base of movement when after several downtrending candles, a candle appears showing that the open and closing prices are identical. A doji usually indicates possible pattern reversal. Dragonfly doji, a bullish pattern created at the base of movement, similar to the doji, but with the addition of a wide-range bottoming tail indicating that control has been taken by buyers. Gravestone doji, a bearish pattern created at the peak of movement, similar to the doji, but with the addition of a wide-range topping tail indicating that control has been taken by sellers. Dark cloud cover, a bearish pattern in which the black candle covers more than half of the clear candle's movement in the opposite direction of the stock's overall movement. Engulfing, a bullish pattern in which the clear candle covers more than the entire length of the black candle in the opposite direction of the stock's overall trend. Evening doji star, a bearish pattern in which the doji heading the trend indicates pattern reversal, and the black candle following it falls at least halfway below the body of the clear candle preceding the doji. Evening star, a bearish pattern. At the trend's peak is a narrow range candle indicating pattern reversal. The black candle following it falls at least halfway below the body of the clear candle that precedes the narrow range candle. Morning doji star, a bullish pattern opposite to that of the evening doji star. Here the doji indicates pattern reversal after the black candle. The clear candle following the doji rises at least halfway above the body of the black candle preceding the doji. Morning star, a bullish pattern opposite to that of the evening star. At its base is a narrow range candle indicating pattern reversal, followed by a clear candle rising at least halfway above the body of the black candle preceding the narrow range candle. Long lower shadow, a bullish pattern. At its base is a candle with a long bottoming tail, followed by a clear candle rising to at least halfway above the body of the black candle, preceding the bottoming tail candle. Long upper shadow, a bearish pattern. Its movement peaks with a candle having a long topping tail, followed by a black candle dropping at least halfway below the body of the clear candle, preceding the topping tail candle. Piercing line, a bullish pattern. After a black wide-range candle, a clear candle follows and penetrates beyond the halfway point of the black candle's body. Hammer, a bullish pattern, formed with a short-term downtrend in which the price of a stock drops significantly but recovers during the candle's time interval and closes with a significantly higher price than the low price. Hanging man, a bearish pattern, formed within a short-term uptrend in which the stock price drops at the start of the candle's time interval but recovers and closes with a high price. The strong sales at the outset indicate the beginning of the end for buyer control. Inverted hammer, a bullish pattern created when dropping stock reverses its pattern briefly and rises, but returns to the bottom at the end of the candle's time interval, leaving a topping tail. The strong buying pressure at the outset indicates the beginning of the end of seller control. Spinning top, a bearish pattern. At the pattern's peak is a narrow range candle with two tails, followed by a black candle that falls at least halfway below the body of the clear candle, preceding the narrow range candle. However, there is little point in learning patterns if you do not know when to press the buy or short button.